Hello and good morning, this is Holly live from 𝐊𝐶 studio and you're watching The Opening Bell. In this specially curated show, we share with you a glimpse at the Australian share market opening trade, along with the global and domestic drivers triggering the market momentum. In the first segment of our show, we'll have a look at the early morning trades, how they panned out, taking cues from Wall Street action overnight. Next, we'll zoom our lens on over to the sector movements on the Australian Stock Exchange. And in the last segment, we'll be looking at the prominent newsmakers on the board. So to kick it off, the Australian share market opened lower, taking cues from flat US market trading overnight. Wall Street witnessed choppy trading after the latest data showed a rise in jobless claims as the economy faced challenges due to the pandemic. The Labor Department's latest jobs data showed the unemployment benefits claims rose by 51,000 to 419,000 in the week ending July 17, the highest jump since May. The figures exceeded the economists' expectations of 350,000. While the Dow Jones rose 0.1%, the S&P 500 climbed 0.2%, although the Nasdaq Composite surged 0.35% higher. Basically, tech stocks lifted Wall Street to close higher on Thursday. Analysts were of the view that the market is probably digesting some volatility from the last few days, even as the unemployment data by the US Labor Department added concerns. It showed that more people are returning to work, a trend that bodies well for July's employment report. Then in the currency space, the dollar index rose 0.1% to 92.87 as the impact of the softer than expected US jobless claims data faded. Meanwhile, following the auction of $16 billion in the 10-year Treasury inflation-protected security, the US bond yields eased. The yield on 10-year Treasury notes fell 2.2 basis points to 1.26%. Onto the cryptocurrency space now, and after the reports that Tesla boss Elon Musk said the car maker might restart accepting Bitcoin payments after due diligence on its energy use, cryptocurrencies rebounded from lows and traded firm. Bitcoin was 2.1% higher, a much-needed win for the top crypto. While we've looked at the Wall Street performance, let's now have a look at the ASX 200 early morning trades. While the miners were the biggest losers on the board, dragging down the share market, the bottom-performing stocks in this index were gold players Silver Lake Resources and Northern Star. Silver Lake dipped despite achieving her 2021 production guidance. Plus, Westgold and St. Barbara also traded in the red zone. Then, casino operator Crown Resorts slipped as Star Entertainment withdrew a $9 billion bid. On the other side of the board, Redbubble, PointsBet and Hub24 all traded higher. On to our next segment now, and let's have a glance through the ASX sectoral charter. Well, Australian energy players Beach Energy, Santos, Woodside Petroleum and Oil Search traded in the red zone despite an oil price uptick. Crude oil prices surged as well, nearly $1.50 US a barrel on Thursday, on expectations of tighter supplies through 2021 as economies recovered from the coronavirus crisis. Brent crude settled up 2.2%, while US West Texas Intermediate rose 2.3%. Now let's move on to the miners space. Heavyweight miners BHP Group, Rio Tinto and Fortescue Metals all traded lower, amid a downtick in the iron ore prices. The most traded iron ore futures on the Dalian Commodity Exchange for September delivery ended 5.3% lower. Then in the yellow metal space, Newcrest Mining, Ramelius and Gold Road traded lower despite the gold price uptick. Gold prices rose as stocks and US bond yields pulled back to offset a firmer dollar. US gold futures settled 0.1% higher. Well, viewers, it's time now for a short break, but stay with us because I'll be right back for more updates for the Australian share market. Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached
Where the property market is headed next.
What the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
with 𝐊𝐶𝐞 TV. Welcome back from the break. I'm your host Holly, live from 𝐊𝐶𝐞 studio, and you're watching The Opening Bell. Moving on now to our last segment of the show, let's have a look at some quick highlights on the prominent ASX stocks under the spotlight during the early trades. To begin with, Australia's Star Entertainment has withdrawn a $9 billion bid for Crown Resorts. An all-stock proposed takeover was withdrawn over worries Crown may lose its licence to run its Melbourne casino. Australia's number 2 casino operator said it still believes in the benefits of a deal, but was worried issues raised at an inquiry looking into Crown's Melbourne casino could impact its value. An ongoing inquiry was told on Tuesday Crown should be stripped of its gambling licence for the Melbourne resort due to insufficient and uncertain efforts to reform its culture and stamp out money laundering. To give you details of the previous stories, a separate inquiry in February found Crown was unfit for a gambling licence and its newly built Sydney resort. The Sydney inquiry accused the company of turning a blind eye to organised crime, allowing the top shareholders to have an inappropriate level of control over decision-making and ignoring the safety of staff who were jailed in China for breaching the country's anti-gambling laws. Meanwhile, Crown faces another inquiry for its Perth casino. Next up, asset manager Perpetual dipped despite lifting assets under management. The company reported its AUM climbed 3.1% over the June quarter to $98.3 billion. According to the company, the international businesses acquired saw net outflow of $2.4 billion over the quarter, with the AUM appreciation driven by rising markets and investment performance. Next, we're going to have a look at the asset manager grabbing the market attention. Milton Corp rose on reporting their portfolio growth. Milton reported its total portfolio grew 33.2% in the financial year 21, ahead of its benchmark. The All Odds Accumulation Index, for your info, the group is subject of a merger proposal from investment conglomerate Washington H. Soul Pattinson, and said scheme booklets will be posted in August. Milton's full-year underlying earnings per share fell 19.4% to 13.4 cents, on which it'll pay a fully franked dividend of 13.75 cents. It said it expects next year's earnings to beat financial year 21 on the basis of stronger dividend payments from the portfolio companies. And moving on to the next newsmaker under the spotlight, fruit and vegetable supplier Costa Group traded in the green zone on completing a retail shortfall book build at 3.32 per share. The company sold around $28.2 million worth of stock to institutional investors at this price to total a gross raising of $190 million to fund its acquisition of a Queensland-based citrus grower. And next up is gold producer Silver Lake Resources, who was the leading loser on the ASX despite achieving production guidance for the 21 financial year for both copper and gold. As for the 2022 financial year, group gold sales guidance is 235,000 to 255,000 ounces gold, with the copper sales of 600 to 1,000 tons at an all-in sustaining cost range of $1,550 to $1,650 per ounce. Up next, multinational insurance company Insurance Australia Group dipped on swinging to a net loss of $427 million in the financial year 21, given the virus concerns. While the company earned a profit of $435 million in the prior year, for the financial year 22, IAG is guiding for gross written premium growth in the low single digits on an insurance margin between 13.5% and 15.5%. And next, gold miner Evolution Mining rose on completing institutional component of $400 million in capital raising. The company issued 104 million new shares at $3.85 a share. The funds will be used to acquire a number of assets from Northern Star Resources. And lastly, nickel miner Western Areas zoomed up on lifting nickel production over the record quarter. Plus, the company has met the financial year 21 guidance by producing 16,180 tons of nickel over the financial year 21 at a cash unit cost of $4.23 per pound of production. Well, viewers, that's just about all for now. While the market is buzzing with business updates and sectoral movements, we'll be bringing you more stock updates on our upcoming shows during the day. So stay tuned with 𝐊𝐶 TV for more live updates across economies, markets and sectors. This is Holly Shields signing off.